8 o'clock onwards. Without any further ado, we will first have a lighting of the lamp ceremony. Can I invite Chairman Fedai, Mr. Rajay Sinha, Mr. Shastri, Chairman FIMDA, Mr. HK Jena, MD CCIL, and Mr. Subramaian, CGM, Union Bank of India. Can you please raise your hand, sir? Okay. Okay, Mr. Jayesh Mehta from Bank of America. And if I can request the Chief Executive Fedai to join them. Can somebody from Fedai please organize the, I think we already have oil in it. We already have wicks in it. Thank you, sirs. So now we will declare the 16th Fedai Annual Conference officially open. And I would like to start by inviting our Chairman Fedai, Mr. Rajay Sinha, for his address.
Good morning. Mr. R. Subramaian, who is with us online, Executive Director, Reserve Bank of India, Dr. Deepak Kumar, Executive Director, Reserve Bank of India, Sri S.V. Shastri, Chairman FIMDA and DMD, State Bank of India, Sri H.K. Jena, Managing Director, CCIL, senior dignitaries from Reserve Bank of India, other senior functionaries from banking sector, Fedai, and our partner industry bodies. I welcome you to the 16th Annual Fedai Conference. And as Mr. Pradhan has already mentioned, it's happening after nearly 3 years. We all know the circumstances. The only good thing during this intervening period is that to a large extent, and given the problems that we have faced over the last 2.5, 3 years, market actually has behaved very, very responsibly. One thing that actually helped is the market infrastructure that we have in India, guided, motivated, and to a large extent, what should I say, promoted by the regulator and with the active participation of all the partner banks and members. During this period, Fedai also faced the challenges like everyone else and moved on to working online, where they conducted training, everything. I mean, the activities never came to a stop. The only thing is that we also moved to online training program, etc. During the entire period, RBI has been very, very supportive of the markets. And as I said, because of that, to a large extent, and because of a very robust infrastructure, and because of the willingness and ability of the market participants, we could navigate these 3 extremely difficult years rather smoothly. In this background, today's Fedai annual conference takes significance. It's very boring and cliche to say that markets are at a crossroads. Markets are always, in our experience, are at crossroads. But yet, the geopolitical issues and the liquidity related issues, inflation, supply side issues, all these things are coming together and are creating complexities that we need to navigate. The policymakers everywhere, including India, are seized with that. And some of the burning issues actually will be addressed today by the guest speakers, and also be part of the 2 panels that we have today. I'll not take much of your time. I once again welcome you all to this wonderful venue, and all the best. Please enjoy. Thank you.
Thank you, sir. Thank you for those encouraging words to Fedai and for in general in the market. Right. We move on to the next this thing, which is the address by Mr. R. Subramaian, Executive Director, Reserve Bank of India, who is online with us and will be saying. Mr. R. Subramaian is Executive Director, Reserve Bank of India. He has over a span of 3 decades served in banking supervision, enforcement, financial market regulation, reserve management, internal debt management, and other areas in the Reserve Bank. Shri Subramaniam holds a postgraduate diploma in management from the Institute of Rural Management, Anand, Gujarat. He is also an associate of the Institute of Cost Accountants of India and certified associate of the Indian Institute of Banking and Finance. Before I hand over to Mr. Subramaniam, I welcome Mr. Deepak Kumar, Executive Director, Reserve Bank of India. Welcome, sir. Good morning and welcome. So over to Mr. Subramaniam, please.
Much. I think that that's okay. Both the audio and the video should be okay now. Shri Rajay Sinha, Chairman Fedai, Shri Ashwini Sinwani, Chief Executive Fedai, Mr. H.K. Jena from CCIL, Mr. Shastri, many of my friends, my own colleague, Mr. Deepak Kumar, if he is already there. Good morning. I'm very happy to be with you, although virtually at the 16th annual conference of Fedai. Thank you so much for this opportunity to address the esteemed members. And thank you especially, Mr. Sinwani, for enabling me to join virtually. And sorry for not being able to join you in person in Lonavala. Mr. Rajay Sinha spoke about the markets behaving quite responsibly during the difficult phase of the pandemic. But let me, out the outset, express my appreciation of Fedai and all its members who have kept the forex markets running without any disruption, even during the worst phase of the pandemic, because that is what keeps the wheels of the real economy going. And we are extremely grateful for not allowing any of the disruptions affect the forex markets or the external trades or capital flows of the country. We are hopefully in the process of coming out of this pandemic, but the learnings from this period will, I'm sure, stand us in good stead in the months and years ahead. Today, I propose to begin with a few numbers with the growth in the foreign exchange markets during the recent period, and especially the effect of the pandemic on the market volumes. I will then share our perspective on the recent regulatory initiatives in the forex market governing framework before concluding with a few thoughts about our current agenda and the way forward. So let me begin with the growth of the Forex market in terms of market turnover in the recent period. Let me share some figures. In the merchant turnover, 1920, FY 1920 saw a total merchant turnover of 2.81 trillion US dollars. This took a dip in the pandemic year of FY 2021. From 2.81 trillion, it came down to 2.52. And this year we have all the figures except for the month of March. So for the 11 months during the FY 21-22, the turnover stands at 3.01 trillion. So it is well above the merchant turnover volume that we saw in the year pre-pandemic period of 1920. Similarly, in the interbank market, in 1920, the volume was 6 trillion US dollars. This took a dip to 5.2 trillion US dollars in the year 2021. And this year, except for the month of March, we have figures till February, this stands at 5.7. So we hopefully we expect to be very close to the interbank volume turnover in the pre-pandemic period. So that's where we stand today. Coming to derivatives, the average daily volume of rupee non-deliverable derivative contracts undertaken by banks in India has remained more or less steady at about 2.5 billion US dollars daily. Non-deliverable forwards on NDFs continue to be the most traded contracts in NDDCs. Volumes have almost entirely been concentrated in the interbank segment, with the share of client transactions being less than 1%. After the amendments to the Forex hedging guidelines and market maker directions becoming effective, market participants have started transacting in structured Forex instruments from January 2022. The activity in this segment is, however, yet to really pick up. Let me turn to the regulatory side of the markets. When I spoke to Fedai last year, I had highlighted in my previous talk that the last couple of years were known for the way the regulatory framework for financial markets underwent some important changes. The measures undertaken by the Reserve Bank were aimed at simplifying regulations, easing access, safeguarding interests of smaller customers, and promoting India as a main center for price discovery of rupee products. With the objective of simplifying regulations and easing the regulatory burden, the tenets of the financial market regulation were revisited and a new principle-based regime implemented in place of the detailed prescriptive regulations which control the activities of participants in the derivative markets at the operational level. The new regime sets out the desired outcomes without mandating, in most cases, the ways to achieve them. The recent reform measures have provided significant flexibility and operational freedom to authorized dealers, especially in the area of products that can be offered to non-retail users. In such a regime, product due diligence assumes importance in ensuring that market makers offer products that are suitable to the requirement of the users and avoid creation of undue systemic risk. In light of the recent changes in the regulations relating to OTC derivatives and in line with international standards, the comprehensive guidelines on derivatives have been reviewed. The revised guidelines, that is, market makers in OTC derivatives seek to promote efficient access to derivative markets while ensuring high standards of governance and conduct in OTC derivative business by market makers. These guidelines place significant regulatory emphasis on the governance aspects of derivative business, such as product due diligence, suitability assessment, risk disclosures, sharing information with customers, etc. As I mentioned earlier, in line with our approach to create a principle-based regulatory framework, the revised guidelines also stay away from prescribing ways to achieve the intended outcome. It is expected that the authorized dealers would put in place sound governance and risk management framework to ensure that the dealing with customers is in compliance with the regulatory requirements. Among the other recent regulatory measures, I would like to mention our continued efforts towards promoting India as the main center for rupee products. Reserve Bank has been guided by the objective of developing a deep and liquid onshore financial market, which acts as a price setter for rupee products globally, with the objective of incentivizing non-residents to access the onshore market and as a step towards promoting India as a hub for rupee products. Non-residents are permitted to undertake transactions in rupee derivatives with banks in India for the purpose of hedging, and specifically MIBOR-based OIS trades for trading in addition to hedging. Indian banks with operating IFSC banking units or IBUs were permitted to participate in the offshore rupee non-deliverable foreign exchange derivative markets. Last month, in continuation of this measure, AD banks, including their foreign branches, have now been permitted to undertake transactions in the offshore foreign currency settled overnight indexed swap, or what we call as the FCS OIS market. AD banks have also been permitted to undertake FCS OIS transactions beyond onshore market hours. It is envisaged that the participation of banks across the onshore and offshore markets will integrate these markets, reducing the segmentation between these markets. A certain amount of integration is already visible with reduced spreads between the onshore and offshore markets in both the NDF and the NDOIS markets. Going forward, we hope that as the footprints of banks in India in the offshore market increase, price discovery of rupee products will also consolidate in the onshore market, providing more opportunities to the banks in India and enabling India to develop its onshore market. Access to foreign currency settled OIS as well as NDDC would also facilitate our ongoing initiatives towards greater internationalization of the rupee. An important development in recent periods has been the gradual emergence of the GIFT City as a major financial center. With an increasing number of banks setting up IBUs, we have seen growing volumes of INR-linked derivatives, especially the Forex derivatives, being booked at the GIFT City. The development of the GIFT City as an international financial center is an objective the RBI shares with the Government of India, and towards which many progressive steps have been taken. In the area of financial markets, we have permitted foreign currency settled rupee derivatives to be traded on the GIFT City exchanges. We have also permitted IBUs to undertake rupee-linked NDDCs and foreign currency settled OIS transactions. Through these linkages, we hope that over the months and years to come, these initiatives will set the stage for an integrated, efficient, and unified financial market for the Indian rupee across offshore, onshore, and GIFT City. Transparency in dealing is an important consideration for customers who are actively using derivatives for managing their Forex risk. Price transparency in OTC derivative markets can be improved by data dissemination by trade repositories. By indicating the levels at which market participants are willing to transact, price transparency in financial markets would assist in promoting market integrity and customer protection. In India, the Clearing Corporation of India hosts trade repository services for OTC rates, forex, and credit derivatives, and also disseminates data on these markets. Given the importance of data dissemination in improving transparency in OTC derivatives, a review of OTC data dissemination was undertaken by the Reserve Bank jointly with Fedai and the Clearing Corporation of India. Based on this review, we propose to enhance data dissemination by CCIL. This measure is a step towards improving transparency and facilitating greater customer participation in OTC derivative markets. One of the prerequisites for an orderly development of the forex market is that customers should be able to undertake forex transactions in a fair, transparent, and cost-effective manner. In my last address, I had highlighted that the Reserve Bank has been receiving feedback about the fairness and transparency issues faced by the retail customer while converting currency in the spot market. In a bid to address these concerns, FX Retail, an electronic trading platform for customer foreign exchange transactions, had been launched. It is expected that dealing on this platform, customers will be able to execute transactions at market-determined rates with transparent disclosure of the markup charged. Recognizing the usefulness of the FX Retail platform for achieving the objectives of fair, transparent, and cost-effective customer transactions, FX Retail has been included in the awareness campaigns run by the Reserve Bank through its regional offices to create awareness about this platform, especially among MSMEs. The Reserve Bank has also requested the major industry bodies such as NASSCOM or FICCI to create awareness of this among their members. We have also requested Fedai and NIBM to incorporate a session on FX Retail in their training programs pertaining to FX markets. As banks are the connecting link between customers and FX Retail, it is important that bank branches are well aware of this product. Accordingly, banks have been directed to sensitize their branches about FX Retail and the associated processes. While the Reserve Bank is gradually moving towards a principle-based regulatory framework, there are associated expectations from authorized dealers and other regulated entities in these changing times. With principles-based regulation, the role of the boards and the senior management of banks in ensuring compliance with the regulations get enhanced. It also entails a shift in the mindset of the regulated entities as well as their skill sets in interpreting these regulations. The staff may need to develop the capacity to elaborate on and enforce principle-based regulation without always having the support of detailed rules. This capacity has to be enhanced throughout the organization across various levels. A bank may, for instance, need to internally deliberate whether enhanced due diligence in case of a complex product is commensurate with the complexity of the product being offered to a user, or its actions are suitable from the user's perspective. Banks may probably need to review their sales and service approach, examining end-to-end processes along with pricing structures and levels. The recent reform measures have set the stage for a fundamental integration of the domestic market with the global markets with a 24/5 trading setup. The banks now have a direct linkage with offshore markets, necessitating an agile setup backed by sufficient expertise in risk management to identify and evaluate risks. Fully integrated financial markets also pave the way for shocks to propagate more quickly among market participants, necessitating appropriate risk management processes to be put in place to mitigate these risks. The recent gyrations in the financial markets with heightened volatility amidst geopolitical unrest concerns on global inflation and other macroeconomic factors, and continued COVID-19 related challenges only underscore the need for prudent risk management practices. Another development has been the move to introduce a T+1 settlement cycle in the equity market in India. And this has been a subject of discussion among bankers recently. While the recent reform measures to provide the banks the wherewithal to manage shorter settlement cycle, nonetheless, the development may entail in the terms of technology infrastructure and operational systems in banks, as well as more efficient rupee forex liquidity management by them, especially in order to manage the FPI flows received beyond normal market hours. With access to global NDF liquidity, domestic NDF liquidity, and deliverable INR liquidity in a 24/5 trading setup, the development also presents an opportunity to banks to consider developing their domestic setup as the primary center for risk management of their global operations related to the Indian rupee. There has also been feedback on provision of additional settlement at end of day by CCIL, but this we feel should be based on a solid business case rather than a regulatory directive. I would also like to highlight another important expectation from the authorized dealers. The recent regulatory changes have liberalized the regulatory framework with an intent to provide operational flexibility to both the authorized dealers as well as the users. Access to complex derivatives is expected to give users more risk management options as India's global trade integration expands. These products may offer a superior mix of risk management at a reduced cost to the users. However, data shows that there has been negligible traction in these products. I'd like to emphasize here that the development of financial markets is a two-way process between market participants and the regulators. It not only involves liberalization of markets through the regulator simplifying its regulations, permitting new products and markets, but also requires market participants to reskill themselves for the constantly evolving market conditions and products and take the initiative to offer the products to suitable users. If the benefits of reforms in the financial market regulatory framework do not reach the customers, we would have failed in our efforts. On FX retail, while the Reserve Bank has taken measures to create awareness about the platform, it is expected from the authorized dealers to step up their efforts in promoting the use of this platform and in providing liquidity on this platform, which till now has been rather lackluster. The Reserve Bank has also issued letters to the authorized dealer banks, advising them to take urgent measures to ensure that customers choosing to deal on FX retail platform are facilitated both in letter and in spirit. I would once again request the ADs to revisit their policies and procedures and contribute towards enhancing fairness and transparency and retaining the confidence of the customers. Having talked about various regulatory initiatives and our expectations, let me just briefly share with you our thinking on the way forward. Reforms in financial sector is an ongoing process. Having taken a number of measures, our focus is now on ensuring that the desired outcomes are achieved. The manner and extent to which we can achieve the desired outcomes would set the stage for the next set of reforms. Notwithstanding the development of financial markets, participation in these markets by all segments of market participants, especially certain segments of banks, remain quite limited. Active participation by a larger segment of participants will be the key to adding to liquidity and efficiency in domestic markets and making these markets attractive for non-resident players. As it is often said, liquidity begets liquidity in financial markets. A number of initiatives has been taken to remove frictions in financial markets, especially for the non-resident participants. Permitting cross-border posting of collateral, allowing an extended reporting window for FPI participants in the government securities market, and permitting banks to fund the margin payable by FPIs for their government securities transactions are some of these examples. Removal of structural rigidities is, however, a continuous process, and I'm happy that all of you individually and through Fedai have been bringing these issues to our attention. I can only assure you that these references are examined thoroughly in the Reserve Bank of India, but we'll always factor in prudential considerations before taking a final decision. But we'll definitely go through the consultative process. Fedai has been, and I'm sure will continue to play an important role in giving us feedback on the measures taken so far, as also in proposing further measures to help develop the onshore foreign exchange market. We are all part of this journey, and we look forward to working with Fedai and its members in this journey. Thank you for your patient hearing. I wish you fruitful deliberations and a very happy stay at Lonavala over the weekend. Thank you so much.
Thank you very much, Mr. Subramaian, sir. We would have loved to have you be here with us, but even your virtual presence has given us a lot of knowledge and insights. First of all, thank you very much for elaborating on the liberalizations that RBI, Reserve Bank of India, has taken in the derivatives market. Also, the steps and the reforms that have taken place in the other areas, also permitting non-residents various products, and also elaborating on the steps that have been taken in Gift City for various products to be permitted for residents as well as non-residents. And we note that our Reserve Bank of India has moved to a principles-based regulation system, and therefore that puts a greater onus on authorized dealers in terms of governance, in terms of delivery of products and ensuring that they reach the customer. And we also note that as far as compliance and operational part of it goes, that burden lies on authorized dealers. We also note that you mentioned about the various skill sets that now need to be developed amongst authorized dealers, so officials, to be able to cope with the new principles-based approach that Reserve Bank of India is taking, as well as the various liberalizations that have taken place in the products that are permitted now in the Indian markets. We at Fedai, of course, will try our best to train the employees of our member banks, and probably we also need a slight reorientation in the kind of trainings that we have been giving in Fedai. We also note the responsibility that you have put on Fedai in terms of conveying to Reserve Bank of India as and when there are certain rigidities in the system, or when there are needs for different regulations to be changed or modified. So thank you very much, sir. It was a pleasure to be able to listen to your words. And if your schedule permits you, we would love if you can be with us and witness the rest of the conference. That is provided, of course, your schedule permits it. Thank you very much. Now the next, we move on to the next part of it.
Thank you so much. I think the connectivity here is not so good. I think I'll take leave with your permission, and wish the deliberations also
to the next part of our program. I invite Mr. H.K. Jena Managing Director, CCIL, for his address here. Mr. Jena, of course, in the sense, frankly, doesn't need an introduction in the foreign exchange markets. He's been in the foreign exchange markets for a long time. Most of you must have already interacted him at various, through his journey through State Bank of India. But just as a brief introduction, uh, prior to joining CCIL, Mr. Jena has worked in State Bank of India for about 35 years. And he's been through all areas of different aspects of banking in State Bank of India. His last assignment in State Bank of India was as the Deputy Managing Director in charge of the global markets. He has served on various boards, such as for Fedai itself, then SBI Macquarie Infrastructure Management Private Limited, Oman India Joint Investment Fund Management Company Private Limited, SBI SG Global Securities Services Private Limited, Gujarat State Energy Generation Limited, and SBI DFHI Limited. Sir, please.
Thank you, Pradhan sir. Good morning to all of you. Chairman Fedai, Sri Rajay Sinha, Sri Subramaian, ED RBI, Dr. Deepak Kumar, ED RBI, Mr. Saurabh Nath and Mr. Manoranjan Padi and other senior members, officials of Reserve Bank of India, Mr. S.B. Sastry, Chairman FIMDA, Mr. Aswin Sindhwani, CEO Fedai, representatives of Forex Association of India, Foreign Exchange Brokers Association of India, our Financial Benchmark of India Limited, and senior members of the financial markets community. So I'm indeed privileged to be amongst all of you here. It has been difficult 2 years for all of us. With those difficulties, we have learned more number of things. We have tried to unlearn also many things. It's good when I arrived here, we had a small holy celebration, thanks courtesy Fedai. They added some colors. So suddenly we could realize that our personalities have attained or received some colors. That was good. So please keep it up. I think after a gap, we are holding, Fedai is holding the conference in India. Whenever I was in Fedai, I used to request that, can you hold it in India? But probably our colleagues used to feel that holding a foreign exchange conference in India probably would not be worth it. There have been occasions when we used to visit abroad for the conferences. Some people used to have some curiosities to know what is this Fedai. They used to know that this is Foreign Exchange Dealers Association of India. They say that what about its operational area? It's India only. What about the delegates? They are from India only. Then why is that they have discovered a foreign land? So probably our comfort level certainly goes up when we are on a foreign land. So I used to tell them that, look, there have been some companies which would be having names. but they were not originated in India. East India Company was not originated in India, nor the French East India Company, or even the Dutch East India Company. All these companies were originated or registered elsewhere. They did some business. I used to feel that, okay, हो सकता है किसी दिन हम लोग भी बाहर business करेंगे. So, notwithstanding that whether we do commercial exploitation of the business opportunities outside India, but certainly we are in a position, we have the requisite conviction and confidence, we can develop those things in India. So I joined Clearing Corporation of India Limited in 2020. So many of us, we couldn't meet after that. We had a lockdown. Earlier, we used to have only masked data. All unmasked faces used to mask the data. But suddenly we discovered that even unmasking also data needed some masked faces. So that was the reality we had to face. The advantages which we used to have all on a sudden became disadvantages. And the disadvantages to some extent were converted to our advantages. So precisely, how do we also think about the disadvantages which we have? We can convert it to our advantages, and we can make a better and stronger financial infrastructure in the country. CCIL is a central counterparty. It provides certain facilities to its members. Of course, I find here it's like a family gathering for CCIL, because with all of you, CCIL has past relationship, present relationship, and will continue to have future relationship also. When I look at this August gathering, I find that I have my regulators here. They will continue to be our regulators. I have our members, notwithstanding the fact that there could be different scenarios, I believe they will continue to be our members. And there are, I find some faces that who are our owners. There may not be some owners. They could be future owners. I also see some of the directors on our CCIL board. Some others could be future directors. So that way I feel that this gathering of the luminaries of the financial market are very closely related to CCIL. So what does CCIL do? As a central counterparty, I must facilitate certain activities. That is the mundane activity, the clearing and settlement. Since we undertake the multilateral netting, so as a result of that, probably the liquidity factor is well addressed there. Whenever we undertake various trading activities in the market, as individual entities representing or traders representing individual financial entities, there would be creation of certain risk, and I assume that the risk, whatever is assumed by the entities, they are as per their risk appetite. But system as a whole could have a different risk appetite, and to reduce the systemic risk, and in the process many times reducing the individual risk, the central counterparty plays a very important role. then certainly there is a possibility that there could be market abuses. Nowadays we have FX, the global code is there, some other codes are there, but they are voluntary activities. So probably in some of the areas, even as per the RBI ETP guidelines, that is also there, that market abuse has to be monitored and reduced. So those factors are certainly looked into. I will have a very short introduction of whatever CCIL and its subsidiaries they do. Then I will have a small presentation. We have inherent weaknesses, both physical, mental, emotional, and intellectual. So I got a compliment this morning. Somebody told me that Mr. Jena, even at this age, you look to be, you have maintained your health, you look to be good. I don't look good, but I have to take the compliment on the positive side only. So why does all those things come to us? Because we feel that it's not that my health is showing up that, but the health of the system or health of the entity I'm representing here, probably which was read out. So for that reason, as ED earlier spoken about data dissemination, so transparency certainly is one of the most important factors. That is the basis on which many times the traders, they build up their positions, they square their positions. The mid office or the risk management department, they try to manage the risk by way of various limits. I'm not, I don't say that we do not have, we have a lot of, I think, scope for improvement. So that will come in the third part, because getting such a gathering to receive inputs on various activities of CCIL, both which we are undertaking and which we could undertake in future, that would be a great opportunity for us. We'll come to that after the presentation. So far as our products are concerned, I will not explain all the products offered by our wholly owned subsidiary, which is ClearCup India Limited. We have for the Forex, so far as the Forex market is concerned, we have one FX Clear. That is for the spot side. There is one FX swap, that on the forward side. Those are for the interbank. Then of course, as ED has spoken about, we have one FX retail platform, which have a lot of functionalities, and we propose with synergy from all the market participants, will make it more robust and more customer friendly. Since as one of your role, you are our clients, so necessarily I will have to look into all the factors or the inputs which can be given to me, could be solicited or unsolicited. All those things are most welcome. So about the platform, I think we will have a small presentation on that. Then after that, we will have a question and answer session, but I assure the organizers that we will maintain the timeline, we will not overshoot. So as I said that during the COVID time, the weakness has grown, so I need some support I have to hedge myself against. So I request two of my colleagues, Kamal Singhania and Moksha, to join me if you permit. So they will help me in running the presentations. Yeah. So I will first, Kamal Singhania is the head of the Forex at CCIL. So he will look at the Forex part of the things before Moksha comes in and I think explains about the legal entity identifier India Limited earlier.
Thank you, sir. Very good morning to all the dignitaries present here and also not present here, Subramaian, sir. So in the Forex side, as you are aware, we have CCP clearing of FX market in USD INR, including forwards. Then we also have CLS clearing. Again, it's a unique arrangement, not only in India, but globally, where the cross-currency settlement of the entire country is routed through one entity, CLS CCIL arrangement. And with our subsidiaries, as Jena sir mentioned, that we have platforms in the Forex area, FX Clear, which is a spot, and then FX Swap for the forward and swap market. And recently launched platform FX Retail, which is at the initiative of RBI, so which is for the customers. So CCIL Forex clearing, and we also have platforms in the other financial market in which we operate, such as money market. So CBLO is what TRAPES, CBLO earlier, now it is TRAPES. Then NDS Home for GSEC market, and we all derivatives market, Asteroid for the derivative market. So some of the recent initiatives I would like to mention that we have, next slide, please. Yeah, so we have launched a clearing member structure in the Forex clearing. This is to encourage CCP clearing, so that your customer, such as corporates, MSME, or say non-resident entities, etc., they can avail now CCP clearing through CCIL, through you, directly through you. If you become clearing member, you can provide a CCP clearing to your customers. So that is launched some time back, and we request you to become clearing member and extend this clearing services to some of your customers. We have also recently launched or extended our CLS settlement for the IBUs member in GIFT City. So now all the IBUs members, IBUs which are there in GIFT City, they can now join CLS. We have received some of the applications in this regard. So some of the banks have already applied to us. So the other members can also join CLS membership. Now we are also working, we have also extended clearing hours, clearing and settlement hours in the our normal Forex segment. So from now it is 8 to 8, which was now 10 to 3:30 sometime back. So we have extended with the extension of 24/7 RTGS. As Mr. Subramaian has said that FX Retail was launched some time back. So it was launched with cash on spot, and now forwards have been added. So booking of forward, booking, of course, rollover, cancellation is also now available, made available. And we are also working on the option period forward for customers, so which will be launched by this month end. So we are committed to provide all the required features in FX Retail platform. So moving on to the guiding, moving ahead. Next slide, please. Yeah, so we would like to have more market share in the trading platform because the trading platforms in FX is, as you know, is a cost effective. And the CCP guarantee starts from the point of trade, which is again a unique in the OTC market. So with that,
in this connection, if you have a different view that some other things need to be done, we are open to it. Whatever logically can be concluded, all those things could be provided by us. Of course, with the proper risk management framework and other things. So we are open to any idea that whatever you suggest, that which are the impeding factors for not your being able to do trades over our platforms.
So FX Clear, where we would like to have more market share. So it has all the required functionalities which we could have thought of, and even the API facility or the automated trading is also made available for last 3 years. And some of the banks have already started using it. So we would like to you also to explore using FX Clear through API facilities. So in the CLS segment, after our service is extended to IBUs, we thought that we can extend these services to Indian branches of foreign branches of Indian banks. So we are working towards that. And we are also proposed to introduce NDF clearing in India. So we are also working on that. We are also had market discussion on that. Through direct market participants and through RAG, Risk Advisory Group meeting. And we are actively considering that proposal to be made live. Yeah. Next slide. Yeah. Okay.
Moksha. Yeah, thank you, Kamal. I think I have a request to make. We know that perception is one of the most important sources of knowledge. But perception is not the only source of knowledge. So in this connection, I will request that it's not the visibility alone which matters, whatever the contents, whatever is their insights, all those things also do matter. So you can have some inferences and you can have some evidences also, either that helps you in going forward, doing the trades through us, else you can suggest us what are the drawbacks. So those are the things probably I will request you to come forward with. Yes, LEIL is an important institution. So we are the only local operating units to issue legal entity identifiers. In this connection, we need a better synergy among all the banks. CCIL between CCIL and the banks. So before we go ahead with that, a small presentation.
Thank you, sir, and thank you, Fedai, for this opportunity. McKinsey in 2019 estimated that banks and financial institutions spend around 2 to 4 billion for KYC onboarding process. Now, this huge cost is increasing year on year. And why is this cost always increasing? One of the key things which McKinsey report says is because there is not a common identifier across the globe. Here, there is an identifier, legal entity identifier, where an entity is identified uniquely across the globe. Next slide. Sorry, previous slide, sorry. What information does LEI capture? The very first is the basic card information. That is about the name of the company, the address, the identifier. And the second is the most beautiful piece which the LEI number captures is the relationship data. That is the direct parent and the parent above it. That is the ultimate parent. In the interest of time, I'm just emphasizing on the important things. Next slide. Next slide. Yeah. So this is one of the key things that an LEI number can give to financial institutions is exposure monitoring. In Europe, this is a mandatory exercise which banks are required to do when they do Basel reporting. So when they report their exposure with counterparties, they report their direct and ultimate parent and carry out this exposure monitoring exercise. We wish to also introduce you to an API facility. RBI has mandated LEI for OTC derivatives, transactions, Forex transactions, and one of the most significant contribution of RBI is in payment systems, that is RTGS and NEFT messages. This is one of the key things which I would like to highlight, which even Europe and US have not achieved, which RBI has achieved to implement LEI for payment messages. So this all mandates of RBI strengthen the use of LEI in India. We are providing this API, which will automate financial institutions like banks to validate their LEI number. And this is an automated solution where we invite banks to use this facility. Previous slide. Sorry. One more concept is a validation agent, which is globally currently under discussion. Now, what is this validation agent framework and why do we need it? Banks are also doing the KYC process, and we at LEI also ask for a lot of documentation. So this particularly exercise emphasizes on reducing the duplicacy in the onboarding process and increases the customer journey. So we invite banks to also collaborate with CCIL and become validation agent with CCIL and work with us closely. To conclude, we would like banks to work under the guidance of Jena sir. We would like to enhance our relationship, existing relationship with CCIL. We would like financial institutions for three key things, which I have said. We can work on the exposure monitoring exercise, the API exercise. Banks can use this API. And third thing is on the validation agent. Thank you, sir.
Thank you, Muksha. I think now I will request that if you have any questions or any inputs to be taken into account while making decisions or implementing certain decisions, we would be too happy to note down all those things. Yes, Rajay. We will examine that. Anyway, we are secular so far as the credit factor is concerned. So we will look into it. Then certainly there is no rigidity that it has to be necessarily be dollar rupee. So
For NDF.
no, all collateral will be rupee. Okay, now Kamal said that we will accept rupee collateral. But can be a mix also. There could be some of our members who would be may not be so rich in. Now we can give the flexibility. Yeah, so that should be. So if you do not have questions, Jay.
Is there an idea that, KYC, if it is done by CCIL, and then the banks don't need to do the KYC or KYC refresh, how will that work?
Thank you, sir, for the question. The model works where the banks become, they already have the clients. So they, on behalf of the clients, fill up the LEI application, or it is via an API. It can be worked out with CCIL, and they would do the validation process. So they would be included in the validation.
Actually,
No, my
KYC
question is like,
undertaken by the banks. So customers, they resent that we have to do it at the bank, we have to do it at LEIL. So why there are so many repetitive processes or duplications?
No, I get it. So it's like either CCIL does the validation or the validation agent a bank does. But bank A does it, the rest of the banks, can they just use it? Is there an idea to move towards that?
Yes, sir.
So just like eKYC, and then, if it is there already on the CCIL, KYC is done by some bank, the other banks can just use their data.
Yes, so this is with the validation process is with respect to the LEI number. And once it is validated, this LEI number is publicly available. So it is deemed certified that other banks can use, and it is KYC certified.
Yeah, actually the LEI is not issued by the validation agents. LEI is issued by LEIL, but they are our validation agents. They can validate. Process is shortened, but we follow. Yes. Pure KYC part, if CKYC is there, then certainly that would help. But when it comes to the financial aspects, whatever other additional information we seek for, which the banks have, because if they are some borrower units, so all those information would be readily available in their loan life management system or elsewhere. So they may not have to do much. We are also trying to have APIs which will capture from public sources what are information available, so that the LEI applicants, they are not put into maybe unnecessary burden of providing a lot of information to us which is available. That becomes more pertinent when it comes for renewal. But CKYC part is certainly, that part will help. Anyway, we have that.
So bank's role as validation agent goes beyond KYC. There is some financial information
Some
also which needs.
information, the relationship tree, the parental organization, which are the subsidiaries, which are the step down subsidiaries, all those information would be required. So those part, all those information may not be available in CKYC, and that undergoes a change. So that part probably will need. And of course, in a lighter vein, we will share some of the income with all the validation agents. We don't want to get enriched by issuing LEIL that reduce LEIs, that reduces systemic risk to a great extent. And we want that a lot of things should be done in a more transparent way. CCIL and its group of companies, they are all homegrown. So there won't be any impact. Of course, we have never been aggressors, but even if whenever we defend, there won't be any challenge due to geopolitical situations. So it's your own institutions. You all have made it highly transparent. Anytime you need any information, all those things would be there. And anyway, this I am speaking before our regulators.
Apart from the validation role, you have to confirm to SLA standards which the regulator has mentioned. So the data quality has to be up to the mark. Otherwise, there are the liabilities which we incur, we'll pass on to the validation agent in terms of SLA and data quality with our regulator, because those strict norms which our regulator has prescribed, our regulator is GLIFE, which is based in Switzerland. So all the standards of data quality and service level agreements, validation agent will have to abide by while
I
processing.
think more or less those things most of the banks will be following.
No, actually, no, thanks for that. The point was which Mrs. Ashwani was also raising. So in terms of transferability or usability of a LEI number by every other bank. So if it's a validated LEI number, can that be a sort of a surrogate for KYC? But I guess that's a question more for the regulator to sort of prescribe rather than the
Yes.
infrastructure. The infrastructure exists, but it's
That's
a
beyond
question of-
our
yeah.
brief. That part we can't say. Anything else?
No, thank you so much.
Okay, thank you. So I have only few questions which you can respond to me earlier. So far as FX clear is concerned, if you are not satisfied, please tell us. If you are, then tell others that it's a good platform. Same with other platforms as well, and including FX retail. So I request all of you to take active interest in maintaining a very highly compliant and strong market infrastructure. Thank you all.
So thank you very much, sir, and your team for giving us that elaborate presentation on CCIL and its products and the various steps that you are likely to take forward. Can I now request Mr. Ashutosh Raina from HDFC Bank to please come here and present a momentum to sir on behalf of Fedai. do you want to, are these your papers, sir? And would you want to take it? Kamal? No, no, it's okay. I mean, if you want to leave it, it's fine with me. Right now, we're going to have a half an hour tea break. It's been slightly postponed, but that's okay. I think I'll still stick to half an hour for the simple reason that I'm sure you all will want to meet each other, talk to each other. So we come back at 20 minutes past 12. Yeah, thank you very much. Thanks, all of you. And we go on to our next part of it. As you all know, Fedai does several activities. Some of them we have been doing for several years. Some of them are new. Uh, we have a daily quiz which comes on our website, in which we give a question related to Forex, either trade or treasury. And people participate in that quiz. We also have a weekly quiz, which we again give every Friday, in which again we've seen a lot of participation. We have our online learning modules on derivatives and some other products that we have recently started. We have a monthly newsletter, which we again give every month at the beginning of the month, next month, which again gives all the kind of developments that have taken place in the market, whether these are regulatory, whether those are appointments, whether those are new changes that have taken place in the Forex markets. Then we have also started a monthly discussion series in which we call people from the, again, expert from the markets to these are all again, the monthly discussion series and all that have been taking place online for the simple reason that because of COVID, we've been going more and more online. Then we have also recently the quiz questions that we put on a daily basis. We have collected all of the past questions which are there in our archives, and we have put them into various module bunches which are now available. And from the 1st of this month, we're going to throw it open at a price, but they are available. We had started on a trial basis. We had given them free, so some of you may have tried it also. And then, of course, the ebooks that we have. First, we still have physical books also, but we again moved to ebooks once there was a need felt from especially the younger generation, saying that we would like to have those books on either on our mobiles or on iPads or on the computers. And the part that we have been continuing and which we have been doing for a long time is the training part, where we have been holding trainings. Earlier, the trainings used to be physical trainings where people used to actually come to the classrooms. Many of it, the training centers of our own member banks at various places, geographical locations, where we used to assemble the trainers from various parts and who would then come and give training to the candidate. After COVID, we moved that also to the online system. We have been we have been holding trainings more and more on an online basis now. And some, of course, they could either be 1-day capsules, or they could be 2-day capsules, or it could be 4 days, 5 days programs, which we used to run earlier. And at the request of certain banks, we have reduced that to 4 days, because certain banks said we want it online, but we want it only for 4 days, but we want the full gamut of programs, so not just capsules in particular subjects. So totally, in the last 1 year, we have held 20 such workshops, out of which 16 have been online, 1 day or 2 day. Then we had 2 4-day workshops at the request of certain member banks and specifically for them. We also had a 4-day classroom workshops for a Canara Bank, which was again requested by them. They actually wanted more, but once this Delta second wave came, we had to stop and we had to tell them that we will not have any more physical workshops. Hopefully with the COVID on the I would say on the way out, we will start again our physical workshops where there have been a demand for 5-day regular programs that we have, where the trainer and the candidates are both physically present in the classroom. Hopefully, we will be able to start that soon. A total number of 1,494 people have attended these programs in the last 1 year. We have got nominations from 75 banks. To honor the people who have been contributing the most to this particular activity of Fedai, we have 2 awards. The first award is for participating in the highest number of Fedai workshops in terms of number of workshops. So we have the highest number of workshops, 13 workshops out of the 20 workshops. A particular bank has given us sent members, participants. And the total number of participants were 101, of course, but the total number of workshops were 13. The winner of this particular award this year is State Bank of India. Let's have a round of applause for the State Bank of India for having contributed to things. I would request Mr. Saurabh Nath from Reserve Bank of India to please come here to give the awards. Can I request Asit Ranjan from State Bank of India to please come here on the dais? Thank you very much, State Bank of India, for having contributed to this. The next part where we award is for nominating the highest number of officials. The earlier one was for the highest number of workshops participated in. This is about nominating the highest number of officials in the workshops. And this particular bank nominated 110 officials in our programs. The winner is IDBI Bank Limited. Can I have a representative from IDBI Bank Limited to please come here and receive the award? Yeah, thank you. So again, just once more, thank you very much, State Bank of India, and thank you very much, IDBI Bank Limited. And I hope the rest of you get inspired to, for us to pursue this activity, which, as Mr. Subramaian said, there's a great need for skill sets to be now enhanced in view of the fact that Reserve Bank of India will not be giving operational instructions and, giving instructions in terms of complete instructions. They will be giving principle based, and it will be for the banks to ensure that they comply with those guidelines, and at the same time deliver the products and the liberalization that Reserve Bank of India. So we would request all of you to participate more and more in the training activity of Fedai. Now we move on to the next part of our program. The next part of our program is a panel discussion